Hi everyone, welcome to another video by Optionables. My name is Saket. So we are going to see in today's video what exactly happened to the markets, and later on I'm going to tell you a very interesting story which we can correlate to markets with respect to trading. So first, looking at what exactly happened to the markets. So today, as soon as the markets opened, it almost opened 1.5% down. Opening itself, Nifty was close to 300 points down, and it ended close to 150 points higher. That is an intraday swing of around 500 points. And with case of Bank Nifty, it's even bigger. So it opened close to 400 points down and it went up close to 700 points. That is an intraday swing of 1100 points. So Bank Nifty more or less recovered whatever it had lost yesterday, and today it is back up by close to 700 points. So it is a brilliant recovery by banking sector. Nifty has not yet recovered what it lost, because yesterday Nifty fell close to 300 points, but today it only came up around 150 points. So overall, we saw some very good recovery and some good buying which lasted throughout the day. As soon as the market opened gap down, there was immediate buying in all the stocks, and especially auto as well as banking stocks did extremely well. One was Axis Bank because results were way above expectation, and even Maruti results came during the market hour. Even that was way above expectation, and both of them did extremely well. Both were up almost close to 7%. And even SBI, which is a very heavy weight in Bank Nifty, that was also up by close to 5%. So that's the reason we saw some fantastic rally in banking stocks. But all IT stocks, Infosys, Wipro, TCS, everything ended in red. So that is the reason Bank Nifty performed better than Nifty. So that brings us to the next question. So is the market correction over? Can we expect the market to head up from here? The answer to this question is there are still a lot of uncertainties around. One, we have the US Federal Reserve meet. Two, we have the budget coming up. And three, we have Russia as well as Ukraine tension. So even though all of them will have significant impact on the market, maybe in a week or so, all these things will come to a closure. So budget will be done on February 1st. There is also Fed meeting day after tomorrow. And after that, maybe even the Russia as well as Ukraine tensions is going to get sorted out in a week, because there are some severe implications of Russia attacking Ukraine. That is, there is going to be economic sanctions on Russia, where Russia will not be able to convert its currency into any foreign exchange. And after that, it will also be removed from SWIFT. That means nobody can send money to Russia or receive money from Russia. This is one of the worst economic sanctions that a country can get, because the country will more or less go into isolation, because no one will be able to trade with Russia after that. So in case if there is any attack, then this might lead to the following, and that's the reason it is not so easy for a war to happen. It is pretty hard because it comes with a huge implication. So hoping that even this will get settled out maybe in a week or so. By first or second week of February, most of these events must be done, and we might have little less uncertainty moving forward. So that should stabilize the market. So even though the market bounced up today, we are still not out of the woods, since there are a lot of uncertainties. So tomorrow, let's say US market ends up going down by 2%, even our markets can open 1.5% down. There is still scope for a lot of volatility. The markets might end up moving up or down. We still don't know. So that's the reason it's our duty to be little careful in trading such markets. So now I'll be telling you a very interesting story which will help you understand about trading in markets as well as adjustments. So I am sharing this because this one story actually changed the perspective I do adjustments, and because most of you might be questioning that day before yesterday we had a short strangle, and yesterday when the market fell I booked everything. I could have actually adjusted this position and held on till today, and I would have made a lot of profit. But instead of that, when the markets fell yesterday, I closed everything and I booked a loss. So this will bring us to a question: why exactly didn't you adjust? Because we usually do adjusting whenever the position goes wrong, but yesterday why didn't we actually adjust? So that is the same thing I'm going to tell you through a story. So this is a story in 1949 in US which actually happened, and this is known as Man Gulch fire. So once, in a place called Man Gulch, there will be a forest fire in US in 1949. So 16 men go to firefight this fire. So they get down from the plane, and all the tools are also dropped, and now they assemble to actually fight this fire. All of them go with a lot of enthusiasm and josh to put off the fire, And once they start firefighting the fire, they realize that this fire is spreading way faster than they actually can fight it. So they end up spraying a lot of water and everything. The fire doesn't seem to go down at all, and the fire starts moving towards them. So at one point they realize, okay, no matter what they do, they won't be able to put this fire, and now they have to actually run and not stand there and fight, because if they stay longer, the fire is going to eat them up. So at this point, all of them start running. At this point, they realize that there is no point in fighting this fire because it is way faster and way bigger than they can actually fight. And that too, the disadvantage is they have to run up the hill. So this was on a hill and they had climbed down the hill, and now they have to run up the hill with the weight. So the weight is because they have all these tools which they have got to firefight, and it is a very hard task. So now they start running up the hill, and it's becoming pretty hard and the fire is catching up. So there'll be one person out of this group who will do something really smart. He takes a match out of his pocket and starts to light the grass around him. So all his teammates are confused. So there is already so much fire coming down there. Why is he sitting and lighting the match under him, right under him, and burning the grasses around? So he quickly calls all his crewmates to come and stand with him. But all of them think he has gone nuts and they start running. So what exactly he's doing is he's building an escape fire. So what does it mean? So he's burning the grass around him before the fire can actually come close to him. So what this did was he had burnt the entire grass area around him. So he slept heads down. So he put his head down and he slept. So when the fire came, when the fire approached towards him, there was no fuel to burn around him because he had already burnt the grass and there was nothing to burn around him. So the fire actually went around him instead of coming on him. So this is known as escape fire, which he deliberately put to burn around the grass so that when the fire is actually coming, it doesn't come towards him, it goes around him. So back then, these people didn't actually realize that this would have actually been the consequence. If they actually stayed with him, all of them would have survived. But unfortunately, what happened was as they were running up, out of the total 16 men, 13 men got burnt in the fire. Apart from this particular person, only 2 were able to make it to the top. So remaining all of them died in the fire, and this guy was able to survive because he was smart enough to know what exactly is happening in the situation. So after this, so there were a lot of research done on this forest fire, and they actually found out that all the forest fires need not be stopped. The reason is forest fires are something natural. So naturally, old forest is burnt down, and whenever there is forest fire, that itself creates rain, puts it off, and the new forest comes up. If you avoid forest fire, if forest fire happens later on, that will be more deadlier than actually letting the forest fire happen on its own. So that's the reason later they found out that forest fire is very natural and they don't have to essentially put down all forest fires. So what does this essentially help us to understand in trading? You don't have to firefight each and every trade. So actually this was a forest fire which they didn't even have to put off, but they went to put off this fire and all of them got burnt. So in some cases, you don't actually have to firefight the positions at all. It is okay, book a loss, because the consequence of trying to firefight and going wrong is way more than not firefighting the position. So yesterday we booked a loss of around 6 lakh. If I had adjusted this position, let's say I had shorted way more calls aggressively, and today there was a 600-point bounce. Imagine what would have happened. All my calls would have gone burnt pretty severely and my loss would be way bigger than 6.5 lakh. Some trades need not be adjusted at all. So then it brings us to next question, what exactly has to be adjusted? And the answer to that is pretty simple. When the things are certain, when the trend is set, let's say you do a short straddle and the market is very bullish and there is no uncertain news around, and it is bullish because the sentiment around is bullish. Only such trades you can firefight, because in case even if the market comes down, there will be immediate buying which will push up the markets. And when there are uncertain times like these, So today market is falling 900, tomorrow it is going up by 700 points. You don't have to firefight because you don't know what is happening to the markets, because everything around is uncertain. The more you firefight, you will be taking on more risk. So that's the reason you have to also pick when exactly you should do the adjustment. Remaining days, you don't have to do any adjustment, just book the loss and come out with a small loss. And if you're not comfortable holding the position, exit it. Because yesterday I was not comfortable because I didn't know what would happen. What if US actually went up 2% higher and our markets gapped up 2 or 1.5-2% higher? So that would be a possibility because it was so volatile. And if I had shorted additional calls because the market was falling, today morning itself, all my calls would get burnt. So the second lesson what we can learn from this is Dodge. So Dodge is a man who actually put fire around him. So he put the fire around him, burnt the grass, and by doing so, he was comfortable with the position he was standing. He knew that by trying to run, he would actually get burnt and he wouldn't be fast enough, what his other crewmates actually did. So the thing is, he was comfortable with his position. He knew that in the worst case, there might be some small injuries, there might be small burns because of the heat around, but he was sure that he is going to survive. So that will bring us to the next lesson, what we can learn in trading, that even when you are firefighting, you should be comfortable with holding the position. So when you are trying to firefight, you should choose the battles in which you might get minor injuries, but you shouldn't die in the battle which you choose to fight. So this is some very important lesson we can learn, because what ends up happening is the more you adjust. So what are the types of adjustment? You can either do a shift, you can do averaging, or you can do some counter trades or complementary trades. By doing all of this, you will actually end up increasing your risk. Only shift is one adjustment where you actually don't exponentially increase your risk, but all other adjustments will also increase your risk accordingly. And that's the reason you should be comfortable in a position that even if it comes back or even if something happens, that particular loss shouldn't actually wipe out your entire capital. And that's the reason even if you face small loss, it's fine. So these two were some lessons that we can learn from an actual incident which happened. And I hope that you guys also have liked this particular story. And by this, we also come to the end of this video. And if you have liked the overall content, then please do hit the like button, share this video, as well as subscribe to Optionables. So tomorrow we'll be coming out with a video on what exactly we can expect from Fed, and also based on global trends, we will see what we can expect from the markets as well. Thank you so much for joining.